Thank you once again, students. I am recording this video on the topic of creditors reconciliation as written in the heading, with the assumption that you have already went through my previous video on creditors reconciliation, which was based on this exercise. I analyzed this exercise well in details, and remember, I began first with the introduction, the theory behind, and the structure of the creditors reconciliation in the previous exercise. And now I might come back and use some of the information in the previous exercise in explaining this exercise, which is CR number 4, or creditors reconciliation number 4. And if we look at this creditors reconciliation, we are mostly or just given theory throughout. We are not given the ledger account and we are not given the statement, but we are required now to use the above information to reconcile the monthly statement received from BG Wholesaler. So now it means BG Wholesaler is our creditor. So now the statement received from BG Wholesalers Ltd with their account in the creditors ledger of Antec Pty Ltd at 30 of June 2008. So now we as the company, our name is Antec Pty Ltd, and we buy inventory on credit from BG Wholesaler. As I said, that BG Wholesaler is our creditor. Therefore, now a creditor is a liability on our side, and liabilities increase on the credit side and they decrease on the debit side. So now this is what we are doing based on the information that we are provided. So now two things that we'll be doing is just to open the ledger account, then after do the statement of creditors with the two columns, debit and the credit. So now the ledger account, which is BG Wholesalers, will be the first one that I want to first open. BG Wholesalers, remember, is our creditor. BG Wholesalers is our creditor. So now this is the creditors account that will normally have an opening balance on the credit side, and the closing balance will normally be on the credit side because this is the liability. So now we then have to have a rough draft of the creditors reconciliation statement, and there is still enough space. Creditors reconciliation statement, I don't know how much space will be needed, but I think this will be enough. Then we do creditors reconciliation statement as at 30 of the month of June in the year 2008. At 30 of June 1980. So now this is the information that we need, and we need to have the debit column and also the credit column, and draw the line in between and also the line to separate the two columns. Then after, we also draw the line here to make our work very neat. Then we start with the balance per statement. Balance per statement, meaning if the statement was given, we'll be taking the balance from the statement, which is the balance at the end. As I said to you that I will normally refer to the previous exercise so that we know where are these figures normally will be taken when the statement is provided to us. So now we have to check, just in reference once again to the latter exercise. If we were given a statement, we were going to take this balance. Remember, this is the previous exercise. For the reconciliation, this will be the amount that will go under balance in the reconciliation. For the ledger account, this is the amount that will go in the ledger account. Remember, all these two are the closing balances, but we are not given the ledger account and we are not given the reconciliation. So now let us see what information is provided to us in this exercise. Then it says you are the accountant of Antec Pty Ltd. You are the accountant. I hope this is a prophetic message. During your investigation of the accounts in the creditors ledger at 30 June 2008, you found that one of the accounts, which is BG Wholesalers Ltd, did not agree with the monthly statement received. And on comparing the monthly statements with the accounts in the creditors ledger, you ascertained the following. So now there is imbalance between the ledger account, which is the creditors ledger of BG Wholesalers, and the statement received from this creditor named BG Wholesalers. And now number one says to us that the monthly statement of BG Wholesalers Ltd showed a debit balance. And the question is, why is this statement showing a debit balance? Remember, it is because the wholesaler or our creditor is seeing, or he sees us as a debtor because the creditor sells inventory to us on credit, meaning BG Wholesalers sells inventory on credit to us. So now to BG Wholesaler we are a debtor, but BG Wholesaler to us is a creditor. So now they record this on their side as a debit balance of 31,215.60. So now this is according to the statement. So now remember, though it's a debit balance, we are recording it from the perspective of the fact that BG Wholesaler is a creditor to us. So now a creditor will have a credit balance. A debit balance according to the creditor statement is a credit balance according to us, 31,215.60. 31,215 rand 60 cents. So now let us take that into again consideration. Let me once again go and do the comparison with regard to the previous exercise. This is the balance that we are talking about here. And now in this case, you might not see either this balance of the statement was a debit balance. If you look at all the totals on the debit side, you add all of them. These totals will amount, including obviously the opening balance. They will all amount to a total of the debit balance, but that is more of in details. I don't want to go there in details. But that opening balance is a debit balance, 31,000, which is per statement. Number two says to us that the account of BG Wholesalers Ltd in the creditors ledger showed a credit balance of the 24,773.60. So now in our records, we have a liability, which is a creditor BG Wholesalers Ltd with the credit balance of 24,000, and this credit balance in our ledger account, we can see that it is not the same as the balance which is on the debit side of the statement received from the creditor. So now we have to do a comparison. We correct mistakes that were done by the two entities. So now this is 24,773.60. This is in the statement. So in the ledger account, 773.60 cents. So now this is what we have as balances for both of them, the balances that do not balance, or the balances that are not the same. So now 1 and 2 just gave us the balances. Then let's go to number 3 and see what number 3 has for us. Now, under number 3, it says that on the 29th, just 1 day before the end of the year, goods amounting to 792 were returned to BG Wholesalers Ltd, and no entry to this effect appear on the monthly statement. So now meaning the amount, remember it says no amount appears where? On the monthly statement. And whenever the statement is incorrect, we make the correction in the creditor's reconciliation statement if the statement is incorrect. So now in this case, meaning the amount of 792 was correctly recorded in the ledger account, which is the creditors ledger account of the creditors ledger account, which is BG Wholesalers, the creditors ledger account of Antec Ltd, which is BG Wholesalers. So we recorded everything correct on our ledger account, but in the statement they did not record this amount at all. So now let us go and we record it in the creditors reconciliation statement. This was because of the goods that were returned, just to confirm. Yes, goods amounting to that were returned. So now we have to say, if goods are returned, on which side are they supposed to be recorded in our books? They supposed to be recorded on the debit side. So now that means this will be added, this will be less returns. We are not adding. In this case, we have to less our returns. Let me skip a line. Less returns, because returns are reducing our creditors. So now the amount of 792 will be recorded on the debit side. Remember, this amount was completely not recorded. It was completely not recorded. So now we say, if we return inventory to the supplier, if we were doing this in a ledger account, it was supposed to be recorded on the debit side, indicating a decrease in our creditors. So now that is why we record this on the debit side of the creditors reconciliation, because we do reconciliation from the perspective of the business, considering the fact that this is the creditor. So now we have taken this into account, which is reducing our liabilities by 792. Then after we go to entry number 4, which says merchandise bought on the 26th of June 2008 per invoice 1275 for 3,612 does not appear on the monthly statement. So now we bought inventory on credit from BG Wholesalers, but this amount does not appear in the monthly statement, meaning the statement received from the creditor. So now this will again go to the creditor's reconciliation statement, because the statement is incorrect or an amount is omitted in the statement. So now any correction that is done in the statement is recorded in the creditor's reconciliation statement. So now the amount is 3,612. Remember, an amount that is omitted, which was a purchase, it's supposed to be increasing our creditors. So now we will record this as purchases omitted, purchases that were omitted. So now this will go to the credit side. Why? Because a purchase is indicating an increase to our liabilities. So now we are more of doing the reconciliation for the creditor. So after we have done everything in our viewpoint, then we'll give this to the creditor and say, creditor, this is how much supposed to be recorded on which side. But the creditor will be recording the figures on the opposite side, obviously. So now we have to record the 3,612, just to confirm. 3,612. This is the amount that's supposed to be increasing our liabilities. 3,612 rands. Confirm the figure. Yes, it's 3,612 rands. 3,612 rands. Okay, I think there is a 60 cents that was missing here. Though it's not here, but there is 20 cents that was missing, 20 cents. I'll show you that figure later on, but there was 20 cents that was supposed to be taken into consideration. Okay, let me just ignore it. I'll see it later on. 3612 is the amount that will increase our creditors. This was a purchase not recorded. Remember, liabilities increase on the credit side. So now hence this amount is to be recorded on the credit side. So now let me again do a point of reference. A point of reference starting with this 792. I want to use that 792 and use the information that the theory that we used before. Under the entry, which is entry number 3, this was the return of goods and services. And this return of goods and services was not recorded in the statement received. So now that means we know that a return was supposed to be recorded here on the debit side of the statement. So now this 792, from the statement perspective, it was to be recorded as 792. And now 792 would have reduced the balance. 792 would have reduced the balance. So now the balance was not reduced. Therefore, now the balance was either overstated now or understated. Then it goes back now. If the balance was not reduced, that will mean now the balance would have been overstated. Let us go and we check in the theory that we talked about, that now less adjustments if the balance is overstated. Why the balance in this case would be overstated? Remember, if we return goods and services, the creditor will regard that as a decrease in debtors because the debtor would have returned the goods and services. And if the debtor returned the goods and services, therefore now that will mean it will have to decrease on the credit side. But this amount was not recorded. So now that means our balance was not reduced. So now this balance will obviously be overstated by the amount of 792, which was not reduced, which was supposed to be reduced in the debtors. And we know that if the balance is overstated with less, that is why we subtracted the amount of 792, because it was under overstated, where it says if the balance is overstated, because an amount was not deducted which was supposed to be deducted, meaning now the balance is overstated. And I want to go again to number 4. Number 4, we bought inventory per invoice 1275. And this inventory was worth 3,612 and it does not appear on the statement. What does that mean? That means if we buy inventory, we know that in a ledger account, as I said, that I hope you would have went through this exercise. In this ledger account of the creditors control, if we purchases are on the credit side of the ledger account. Purchases are on the credit side of the ledger account. So now this will be Election Ltd. So if we purchase and we record our entry on the credit side as increase in our liabilities, and our creditor is selling inventory to us. When the creditor sells inventory to a customer on credit, therefore now that will be increasing their debtors. Take note of that. I'm just repeating that because I explained it previously. So now in this case, we bought inventory which was worth 3,612, but this was not recorded in the statement. So now that means the statement did not add an amount on the debit side. So now the 3,612 was missing. So now that means this balance now was not increased because the debit side will represent an increase because we bought on credit, meaning the supplier would have sold on credit, and the supplier sold on credit. Therefore now the debtors were supposed to be increased by the amount of the sale, which on our side was a purchase. I'm just using this statement. So now this amount is omitted, meaning our balance at the end is underestimated. And the question, if the balance is understated, what do? We add an adjustment if the balance is understated. That is why the amount of 312 is recorded on the credit side of the creditor's reconciliation statement is because of such. That's why we see it appearing there on the credit side as adding that to the balance because the balance was understated. So I want you to understand this concept very well, guys. So now we have covered both of these entries. Then we go to the other one. Please, if you have not went through the first creditors reconciliation exercise, please go through that so that you get to see what I am explaining, because some things might not be clear, might be confusing you if you have not done this exercise before. But this is where we are under number 4. Number 4 is done. Then we go now to entry number 5. Entry number 5 says that merchandise ordered on the 22nd of June 2008. Remember, the month that we are reconciling is the month ending 30 of June. So we made an order on the 22 of June amounting to 1,372. Was received on the 8th of July. Received on the 8th of July. It, however, appeared that BG Wholesalers Ltd had debited Antec. Why they say debited? Because BG Wholesalers is treating us as a debtor because they are selling inventory to us on credit. So now whenever they sell to us, they will debit our account because we are a debtor to them. Their debtors are increasing because they are selling more to us on credit. So it says had debited Antec Ltd accounts on the 22nd of June 2008 with the amount, although the goods were invoiced on the 1st of July. So they debited us on the 22nd of June. Yet the invoice was for the 1st of July, meaning the following month. The question is this amount recorded on the right side? The answer is yes. I emphasized that in the previous exercise. The answer is yes, because if they are selling inventory to us on credit, they're supposed to debit us with the amount. So now this amount of 1,372, it is on the right side, but it is not supposed to be in the statement for the current month. Why? Because the invoice was for the following month. So now this reconciliation that we are doing it only for the month ending 30 of June. So now they invoiced us for the 30 of June, and that was not supposed to be the case. They're supposed to bill us for the following month, not for this month. So now that is why now this entry needs to be reversed in the creditors reconciliation statement. So now let us check. They debited us. Let us check again in the statement, clear statement. If what will this mean? That means on our side in the creditors reconciliation, once again the ledger, Election Ltd. That means on our side, we have nothing on the credit side. We have recorded nothing because we made a payment on the 1st of July. But they recorded this 1,372 on the debit side. Hence, it says they debited us. So now the minute they record this as a debit, it means they are increasing their debtors by 1,372 in the month of June. Yet it was not supposed to be the case. So that means, remember, debit means a plus in their debtors, meaning the amount that we see as a balance here at the end will be overstated because they added the purchases of July in the month of June. That means the purchases of June will be overstated, and also the balance will be overstated. Then the question is, what do we do when the balance is overstated? It says less adjustments if balance is overstated. So that means the 1372 must be recorded on the debit side, indicating that we are reversing the balance. So now we are recording this from our perspective 1372. Then this will be 1372 that we are recording, and this will be purchases for July that were by mistake recorded in the month of June. Now let me again clarify you on this. If the creditor recorded this on the statement on this side, then we have to say on our side, the debit mistake they made to us it would have been on the credit side, because if we purchase inventory, this was going to be recorded as 1,372 on the credit side. So now if we say this amount is on the wrong side, is in the wrong period, and we want to cancel it, we'll be canceling this to the debit side. So that's why we don't cancel it to the credit side of the statement. We cancel it to the debit side of the ledger account. And I also did emphasize on this. You must take the mistake done by the creditor. You record it as a mistake from the perspective of the business in the creditor's ledger account. Then after, you correct it from the perspective of the business, not from the perspective of the creditor. So now hence I'm saying the mistake of recording the 1,000 in the month of June will mean that this will be recorded on the credit side, on our side, increasing the liabilities, but for them increasing their debtors. Therefore, when we correct on our point of view by recording this figure on the debit side as 1,372. That's why in the reconciliation it appears on the debit side, beside the fact that it is overstated. And when overstated, what do? We less. So there's at least a link between the two. Either way you do it, it does not matter, as long as you understand the concept and the theory behind. So now we go to again the next example, or the next transaction, in fact. So now the next transaction say that on the 6th of June 2008, in the current month, BG Wholesalers Ltd is issued a credit note to Antec Ltd for 600, being a special discount granted, but no entry was made in the books of Antec Ltd. This amount appears in the monthly statement. So the monthly statement is correct. So that means if the monthly statement is correct, this is what we're talking about. This part is correct. They recorded here right. But where the problem is, this is where the problem is. So now we must make a correction. So they told us that the discount does not appear. No entry has been made in the books of Antec Ltd. Now, a discount that we receive will be reducing our liabilities. And we know that liabilities decrease on the debit side. So now we have to record the 600 on the debit side of the creditors ledger account, which is BG Wholesalers Creditors Ledger. So now we have to record the discount received. Discount received for an amount of 600, meaning reducing our creditors, meaning our liabilities, people that we bought inventory on credit from. So now we have recorded that discount on the debit side. Then after, we proceed again in the same note. Remember, we are in creditors reconciliation number 4. I am just using the previous exercise as a point of reference for simplicity. Then we go to number 7. It says a payment by Antec Pty Ltd to the amount of 12,650. What is this? It's a payment. Who is paying? A payment by Antec Ltd. We are making a payment. Who are we paying? Obviously, we are paying BG Wholesalers to the amount of 12,650 on the 1st of June 2008 was incorrectly credited by BG Wholesalers Ltd as 12,560. So now let us check. Let us check the difference between the two. We have 12,650 minus 12,560. So the difference is 90 rand. So these 90 rand are very, very common. Previously, we had many 90 rands. So now we see that this was incorrectly credited by BG Wholesalers as 12,560. Who is wrong? Is the creditor statement is wrong. And it says they were notified accordingly, and undertook to rectify the error on the next statement. So now we have to make this correction now because it is for the current month on the first day of June. So now we say, okay, the amount is supposed to be 12,650, but they underestimated, they recorded the small amount as 12,560. And this was a payment. Remember, this was a payment. So now let us check which side does the payment supposed to belong from the creditor side statement. If we make a payment, they're supposed to have recorded here 12,650. This is what they supposed to have recorded, but they recorded 12,650. So now we can see, or we already know, that the difference between the two is 90 rand. So now, meaning instead of reducing the balance by 12,650, they reduced the balance by 12,560. I did the same thing here. 12,560. This is the incorrect amount. This is the correct amount. And the difference is the one that we say is 90 rand. So they reduced the balance by 12,560. So now meaning the balance is overstated. So now the balance is overstated because it was reduced by the lesser amount. Instead of reducing the balance by 12,650, they reduced it by 12,560. So their balance is more than what it was supposed to be by an amount of 90 rand. So if the balance is overstated, what do? Let's go and check in the template. Now, if the balance is overstated, what do? Less adjustment if balance is overstated, meaning the 90 rand must be on the debit side, reducing our liabilities. Less, and we less that on the debit side, meaning the 90 rand must be on the debit side, which is payment error. So now we have captured the error of the payment that was done. Then now we go to the next entry once again. Let me again just do the last explanation with regard to the 90 rands if that is necessary. Just to compare 12,650 and 12,560, and this amount was for, just to check if there any further explanation that I might need, to 12,560, which was a payment. Okay, so now we say on the credit side, I'm still explaining the same thing. They recorded 12,560 on the credit side. And I said, first of all, to correct an error, be able to convert the error into the creditor's ledger account perspective. So now, what does this error mean, or how will this error be recorded in the ledger account of Election Ltd? So now we are making a payment. In other words, the credit mistake would have been on the debit side, because when we make a payment, our creditors will have to decrease on the debit side. This will be 12,560. That's what this will mean. And we can see that our debit side of the ledger account is underestimated. If this was our mistake from our viewpoint, that's why this debit credit means a debit on our side. So now this amount is underestimated, so the correction must be 90 rand, increasing this amount so that the total will be 12,650. So now this is the payment error that we are correcting. You can see now 90 rand will be corrected and added to 5,000 to 12,560 to make it 12,650. That's why now the correction of the 90 rand appears again on the debit side of the reconciliation. That's why it's on the debit side. And above that, even the template tells us that if the amount is overstated, it must be subtracted, which is the debit side of the reconciliation. So now I want to make sure that you clearly understand the topic of the creditors reconciliation very well. It's not just an easy thing to master this topic, I know. But now we go to number 8, and number 8 says the credit side of the account of BG Wholesalers Ltd in the creditors ledger was undercasted, meaning underestimated. When the side is undercasted or underestimated, you just increase that side by an amount of 100 rand. So now, in other words, we just go to the credit side and we increase the credit side by the 100 rand. We can just say error or undercasted by 100 rand. They are telling us that our credit side is underestimated. So now we're just increasing our credit side by the amount it was underestimated with. So now we have captured that part. And now we go to the next one, which is number 9. Number 9 says to us that according to the creditors ledger, the account of BG Wholesalers Ltd showed a payment of 7,470 by Anteg Ltd. Okay. According to the creditors ledger, meaning the ledger account of our creditor, not the statement from the creditor, in our records, in other words, in our records. And when I'm saying our records, I'm referring to this ledger account, in other words, which previously was Election Ltd. So according to the ledger account, which in this case is Anteg, BG Wholesalers, it shows a payment of 7,470, meaning on the debit side there's a reflection of the payment where we say bank, because we are paying here BG Wholesalers. It shows that there's 7,470 on this side, but it was already recorded. We must not record it, but just for explanation and understanding purpose. So that's what they are saying, because payment will be on the debit side, reducing our creditors. On the 29th of June 2008, after 10% discount had been taken into account. So this amount is after a discount was taken into consideration. So now that means we have to know how much was the amount before the discount, because the discount is 10%. So now meaning this amount is 90%. So now we are looking for the 100%, which is the amount before the discount. It will be 7,470 times this by 100, divide this by 90, because we are looking for the amount before the discount was taken into account, which is 7,470 divided by 0.9. Then after this will give us 8,300. This is the amount before the discount was taken into account. Therefore, or else you can 7,470 times this by 100 divide by 90 is the same thing, 8,300. This is the amount before the discount was taken into account. So now we have to say times this by 10%. We realize that our discount will be 830 rand. And if you say 8,300 minus 830 minus 8.3, we get the same 7,470, the amount after the discount was taken into account, that figure. So now we know how much was the discount, we know how much was the payment after the discount, and we know how much was the amount before the discount. So now they say neither Let me erase that part. It will delete everything, no problem. It says neither the payment nor the discount appear in the monthly statement received from BG Wholesalers. So BG Wholesalers does not have the amount of 8,300, which is made of 7,470 times by 100 divided by 90. And also the discount of 830 is also not there. So the discount is also this plus this will give us the sum of that amount. So this amount after the discount plus the discount is not there, which comes up to 8,300. So both of them, they are not in the statement. Let us go and look at the statement if which side was this supposed to be in the statement if it was recorded. So now we say, okay, this was a payment. And if we pay our suppliers, we record it was supposed to be 8,300 on this side, but they did not record anything. They did not record anything. So now that means we have recorded on our side here 8,300, which was a payment considering the discount. But they did not record any 8.3 reducing their debtors. So now that means this amount, which is the balance, was not reduced because a payment by us as the customer, which was going to appear on the debit side as a bank plus payment, any other amount. Remember, this is the ledger account once again. This was going to be recorded as 8,300 on this side, which is cash plus discount. Now, this will be reducing our liabilities. They should have recorded this on their credit side, reducing their debtors. Reducing their debtors because we are a debtor to them. When we pay, we reduce our liability on the debit side, and when they receive the payment, they reduce their debtors on their credit side because their debtors have paid. So now they did not reduce their debtors on their credit side. They said both the payment and the discount, they don't appear in the statement. So this amount is not here. That means if this amount is not here, meaning this balance that is here will be overstated because it was not reduced by the amount it was supposed to be reduced by. So now this will mean this is overstated. So now if the balance is overstated, what do we do? So now if the balance is overstated, what do we do? We know that if the balance is overstated, that is where we are. Less adjustments if balance is overstated. So now that means the amount of 8.3 must be on the debit side of the creditors reconciliation statement. So now we can have that 8,300 bank plus discount. Bank plus discount. Bank plus discount. Other people, there you can separate it and say payment alone and put discount separately, where they record 7,470 and discount as 830, which this will come to the total of 8,300. So now either way, you will still get all the all the answers that you deserve to get. So now from here, we can check if does our balances with the ledger account. Now we go and we check, and I normally forget to skip a line here so that I can draw a line. So now let me start with the ledger account first. Start with the ledger account first. Then the bigger side will normally likely to be credit side, 24,773.60 plus 100 This gives us 24,873.60. This gives us 24,873.60 minus 600. This gives us a balance carried down. Balance carried down of 24,273.60. A balance of 24,273.60. This is a balance brought down. Then now we go to the creditors reconciliation statement. Then we have 31,215.60 plus 3,612, 34,827.60. Okay, what I was thinking was not right. We have 34,827.60. Then we have to totalize 792 plus 1372 plus 90 rand plus 8,300, which gives a total of 10,554 minus 34,827.60, and this gives us a total of 24,273.60. Does this align with the ledger account? Yes, 24,273.60. And if that is the case, then you should be very excited at all times, knowing that at least you balanced your ledger with your creditors reconciliation. So now, with all that being said, guys, yeah, I think I've covered enough, but please start doing the first video that I've done first on this exercise before you can continue and do the one that I was doing, which is this one, because almost everything is connected with the previous exercise and the introduction that I did before. With all of that, thank you guys. God be with you. Shalom.